We're back in studio this week, and Peter Hugg, Global Trading Director for Kitco Metals, joins me now for this special summer series on gold. Peter, good to see you again. Welcome back.
Good to be here.
Good to be reunited with you. So let's look at gold overall this summer. Are we hoping the summer will end soon here, Pete?
Well, we've been, you know, the market's been on a downtrend. You can't argue with that. And, you know, I think we're close to a bottom. I see a possibility of seeing about maybe a 1180, 85 print. I think the dollar's going to run into some pressure in the fall. So overall, I'm starting to get somewhat bullish, but you know, the trend and the technicals still remain bearish for gold. We've been saying that for, God, for at least the last 3 or 4 months when it didn't break up through the technical resistance level. So, you know, the trend right now is down with intermittent rallies, and, you know, until that dollar trend changes, you know, I think gold's going to remain under pressure.
Well, you know, speaking of a bottom, we saw the big news last week, Vanguard closing their precious metals desk. Some saying, you know, that's really a surefire sign of a bottom, but how do you see it, Peter?
I'm still looking for some mitigation here on the trade. I'm looking for people to literally, in essence, throw the baby out with the bathwater and just dump this market. And I'd like to see a washout in the market with no fundamental reason other than people just giving up. We're not quite there yet. I think if we lose 1,200, we might get some of that beginning to happen, and that to me usually indicates that we're settling closer to a bottom. But this market is extremely short. The pros are extremely short this market, so it won't take a major event for the short covering rally to ensue. The question is, will it just be a short covering rally, or will it take it up through technical levels that'll create some momentum? And that's yet to be proven.
And where are you seeing the buyers, Peter? Is it on the physical? Are they going into the ETFs? Where are they flowing?
We are at these levels with gold down in the low 1200s and you know, silver approaching the 1530-ish range. We are starting to see retail buyers coming back in and buying physical product. The selling of the physical bars and coins that we saw when gold was north of 1300 is all ended. So at these levels down here, we're not getting massive buying yet, but we're getting, the ratio has turned around. When gold was at 1300, we were getting about 7 sellers to 3 buyers. Now we're getting the reverse. We're getting about 7 buyers to 3 sellers. They're not coming in en masse yet, but at these levels, they're starting to pick up value and buying physical again. So
$1 million question here, would you be a buyer of gold now?
Again, depends what my motivation is. If I'm a trader, I'm in and out of this market.
Right.
We picked up gold at 1207. At the close Thursday night. We looked for a quick bounce maybe into the 2022 level. We got that Friday. You need to exit the trade if you're a trader. Now we're back down close to the 1207 level. I would take a shot again here for another bounce. As an investor, you have to basically have some of your assets allocated into the gold market, and at these levels, I don't think there's much downside risk.
And you know what's interesting, Peter? You know, as you know, I was at a conference in Australia, and you know, I didn't know what to expect from the attendance, you know, with the summer doldrums here, and it was packed. And I thought that was interesting compared to the conferences back home here in North America, where any sign of a dip, it's a ghost town.
Right.
So there is a longer term focus there, and I guess that's where I was asking you if you're seeing buyers here in North America right now.
No, but I think the reason you may have seen that enthusiasm in Australia, and you probably would see that kind of enthusiasm more from a Canadian investor perspective relative the American side, is the currency depreciation. So in Canadian dollar terms and in Australian dollar terms, the gold market has actually not dropped near as much as it has against the US dollar. Even in context of the euro, the gold price has basically stayed relatively stable over the past, say, 3 months. So in the context of a local currency, I can see why there would be enthusiasm. But again, at these levels here, I just don't see much more downside in the market, maybe another 5% in gold. But if you're not in the market and you want some gold as protection against your overall portfolio, these are relatively inexpensive entry points.
Peter Hugg, thanks so much for that gold update. Stay tuned because we're going to be talking silver next.